The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a great weekend. It was planting time around here when it comes to cold weather crops. I was chopping trees down and planting gardens this weekend. I hope you guys had a good weekend. All right, let's get right into it. Let's take a look at the XLF. And this morning, haven't got any prints off yet, but I want to really take a look at this. This is what we call a trading opportunity, and I'm looking at the notes and bonds in a second relative to this. And as you guys know, the XLF likes a widening yield curve, and as we look at these notes that have continued to fall off, kind of proves the point. The S&Ps have rallied. That hasn't hurt this particular ETF or some of the stocks within it, but we're looking at this particular ETF now hitting the mark as far as in my opinion, retracement back up into some higher levels to short it. And I'm going to take a look at the notes and bonds, and we're going to understand why I'm a little bit leaning that way. But let's go into the scanner here for a second, and let's look at our ETFs, and let's rank them on our daily. There's the financials. Not a weak sector by any means when it comes to looking at net profile breadth calculations. But let's go right into our dashboard, and let's pull up the XLF really quick because I am lazy and I just want to type it in right there. All right, so, and by the way, there's a cool feature. There's a cool feature that we're putting in. I just want to go back to our indices heat grid and ETF heat grid. As you'll notice, I've had to kind of look at the ETF pre calculation and then go back into the scanner and find the symbol. So what we're doing, and I hope Demantis will have this build out today, is we're putting our cell structure at the top of these ETF and indices heat grids. So you'll be able to see, mouse over the inflection points, and also be able to click a chart and get our landscape chart right within the grid here. So when you're in the ETFs, which this has been maddening to me to have to kind of maneuver around this thing to go back and figure out. So as we're looking at the financials, we'll be able to mouse over cells here, be able to find out the inflection points, also get a chart, and kind of get everything you need right from our kind of command module when it comes to looking at the indices or ETFs. So as I go back into the dashboard and I look at the XLF, I can mouse over, I can see immediately that we're sitting at the top of a weekly profile. Now, that being said, you're so kind, Jay. You're so kind. As we look at the XLF, we have to kind of reference two other things, maybe three other things. So the first thing we're going to do is we're going to take a look at the S&Ps. We're going to look at the March contract here. We're going to notice that we've got we had a big day. We didn't close on the highs on Friday, and now we've kind of got a little bit of a slump off situation here, and also have a new profile attempting to appear, that yellow cell there. So we're going to go into the scanner. I'm showing you this because you're able to reference a lot of this without going to the charts. If you have the scanner, there's that yellow peel back. There's those two green cells. There's the 240. And we're able to receive those inflection points. There's the 1975 general area also. So what might be the case here now is we've reached an unfair high on our long-term weekly on the XLF. We've got the S&Ps that, in my opinion, have gotten possibly a little overextended here, and at bare minimum could come back and retest 1975. Let me get our chart back up. sorry about that. At bare minimum, we can go back and retest this 1975 area on the S&P. So you've got a couple of things in your favor. You've got a sector at the top of the heap. Looks like we're reaching a wall there. You've got notes, which I'm going to show you in a second, which are right at a possible bounce point. And you've got the S&Ps that might have just kind of gone a little too far here and may be able to pull back another, what is this, 12, 13, 14 points into 1975. So I'm going to go to the notes here really quick. I'm going to go to the June contract. And we're just trying to put this all together. And I understand that we had some opportunities on the short side, leveraging against 129.20, 129.21.22, and now we're trading right at 129. So again, nice little pullback, but remember, we're still sitting on the bottom of our June contract on the notes. All right, so all things considered, could get a little bit of a move up here. All the economic figures seemingly are pointing north again. And as we look at crude oil relative to all this, this is another thing I wanted to kind of bring into the fold. You look at the April contract, and I did a pre-market video on this. The XLE kind of led this up, and you've had just an incredible move since February 24th. Here's the unfair lows that we talked about leveraging off of, and this was a Bloomberg report that I did too, 30.63, going long, trying to find support. We found that support again, 33.46. Now we've reached the targets on the daily. I did my hands like this. I don't know why. Well, what do they say when they put their hands up? Don't shoot, or it's nuts. Tell you what, we're going to talk about the police and how valuable they are in this country at some point. But anyway, the crude oil situation, we've reached our short-term or intermediate targets. Unfair lows on the long term were 38.50. We haven't met those yet, but I kind of consider this also looking at the XLE and looking at how, the crude oil closed on its highs Friday. This thing kind of languished. There's also a case to be made. And again, we're trying to, wrap up what we talked about earlier. When we go into our 1 hour, the XLE actually was almost a seller dweller as far as, the internals on a short term, not exactly cooperating with that strong close. So, what's happened with the XLE in general, it's led the crude oil march forward, and we're starting to get a little heavy here around that crude oil 36.28. That being said, market may not like that. It's kind of starting to look a little heavy itself. Notes could rally. S&Ps could come off here to 1975. So all these things are in play right now in my mind. And, gold doing what it's doing, we're going to get into this after the break. This is kind of the canary in the coal mine here. I hear the music. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And I think Joey has called in. Joey, you there with us?
Hey, how you doing, John?
Great, man. Good to hear your voice again.
Yeah, good to be on.
Thanks for staying up. And it's 9:15 in Hong Kong. Thank you for staying up today.
I'm always up.
I know that. I think you sleep less
This
than
is
I
like
do.
the
It's
horse
just-
races for me,
I know.
but better because we got the advantage.
Man, when they made 24-hour markets, they just that just put the nail in our coffin, huh? The action is constant now.
Exactly.
Hey, I covered, I thought, quite a bit of a relational kind of trade this morning already. Just wanted you to kind of, I don't know if you listened to the first part of the show.
Sorry, I was having dinner.
I gotcha. We're talking about the S&Ps possibly coming back into 1975, and I know that's not a huge pullback, but that's the big number for the broad market. And do you what are your thoughts? I mean, because I gave my thoughts on the situation with crude oil and how that relates to the notes and I primarily focused on the XLF being at a possible top here. But what's on your mind? Because you've always got some good comments. on
So what I noticed last week was that the rally last week was very broad-based and led by all the laggards. The biggest laggard being the commodity sector and the commodities and energy sector. Okay, so the commodities and energy sector actually rallied and actually closed near the week's high. So that was very encouraging for me. If you look at gold, we haven't had such a strong close on gold or in oil for many years. So this is like a multi-year type of move where we're really trying and actually breaking out of long-term downtrends. And the fact that gold, we talked about.
This is amazing to me. This gold trade.
Gold before 1250 being, a very key level. and the fact that it was able to close above 1250 and oil was able to close above 3350, which was kind of like the daily resistance. You know, I mean, the weekly resistance won't be until around maybe close. We're actually pretty close to the weekly resistance now
On
on oil.
well, okay, yeah, we're kind of getting into a, you know, as you know, a daily unfair high and a weekly unfair low.
Yeah.
And you know,
Yeah.
what I was talking about earlier is, and I did a pre-market video on this. The XLE, the internals kind of looked a little sloppy, I guess, on the, you know, towards the latter half of the day on Friday, and crude oil kept going north, and then it kind of did its customary, I'm going to get to this inflection point. What do you, I mean, my thoughts are is we could relax a little bit here on crude oil. I mean, do you see anything different? I mean, because you seem to, I mean, what you're saying is true, but
Yeah.
I mean, for
Well, you know,
today's and maybe tomorrow's trading, what are you
yeah,
what are
yeah.
you
I think
thinking?
for today's and tomorrow's trading, we could see a bit of a relaxation, just because
Okay.
you know we've had some really strong moves, and short term we're a little overbought. So, you know, but never, you know, get kind of wound up in the real short term to lose the big trade. And I
Right.
still believe that the big trade for oil and gold is and copper is to the upside.
Right.
And
You know, one of the things you said
yeah,
the other day, Joey, I just want to make a comment because when you said the big picture, it made me think of something you said the other day, which is so true. You know, you custom, and I watch you trade all the time. I mean, you customarily, when you're right, and it starts looking even better, you start adding to positions that are already in your favor. That's a very difficult thing for people to do. It takes
yeah,
some heavy duty monitoring and heavy duty risk management, but that's
that's right.
how, you know, when you talk about, you know, kind of multi-year changes like you're talking about right now, that's how you, and I've seen you do this a lot, make
Yeah.
your whole month or year by
Yes.
taking that win that's on the board and pressing the gas pedal,
Yeah.
because it starts showing itself more and more. So if
That's
you
right.
could, from a
And
trading
a lot of
standpoint, talk
people.
about, go ahead.
Yeah.
Okay.
Yeah. And the you know, from my years of trading experience, it's just a lot of times in the past, because you're a trader, you're automatically trying to take profits right away and buy it lower, take profits right away, buy it lower, and et cetera, et cetera. And then
Hmm.
if you do that enough times, sometimes it's kind of like being in a maze where you don't actually, then you kind of forget what the big picture is, and you don't know whether you
Yeah.
should be long or short, or you know, and then you're like, oh, we got to a big, you know, daily resistance, so I'm going to go short. When everything out there, all the macroeconomics, all the technical indicators is telling you that this is a multi-year type of scenario. And so, yes, you go short and you may even make money for a day or two. And then you have this powerful bounce right through all the resistance and everything. And and then you're out of position because you should be long, but you're short. So you cover it and then you don't go long again because you're like, well, I just covered it. I can't go long again. So it's you know,
That's,
being a good trader a lot of the times is battling your own you know, emotions, right?
and Joey,
And
that's so true.
yeah.
Um, from a psychological standpoint, yes, but you know, the thing that you and I talk about all the time is, you know, sometimes people get mixed up on what side of the market really is the, you know, am I supposed to block out the longs right now or just completely block out the shorts and not get into this situation where, oh my God, I was right on the long term, but somehow now I'm just all upside down trying to cover a short to get long
That's right.
again. I mean, it's
It's
nerve
happened to
wracking.
me many times. That's
Oh my
why
God.
I mention it.
But
And so the important thing with, you know, TAS indicators is that you really because the indicators are telling you one thing, you basically block out one side of the trade.
Yes.
And so, for this move in copper, oil, gold, it's basically telling you to go long. And this is a long-term weekly signal.
And you're opting out on shorts. Anything,
That's right.
anytime
So
they're presented, it's not on the
exactly.
board.
So all you do is you go long, and then you go take profits when it goes up, and then you wait for a pullback to go long again. But don't go trying to short the thing to try to make that extra buck, because once you do that, it gets your head all, upside down, and then you don't know which way the trade you're actually supposed to be.
Yeah. Joey,
that's
can you
where the
hang tight?
problems
We got the music going here, and I know we got to take a break now. We'll be right back, guys. We'll further this conversation. I've got some comments also. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I think Joey's still with us. Are you still with us, Joey?
Yeah, still here.
Great. Yeah, we were just for guys joining us late, we were just talking about some trading philosophy, I guess you'd call it, and how a lot of people get caught up, even though they look at the big picture and then try to be a hero and try to maximize somehow the amount of money they can make out of a trend up by trading the contra trades that are along the way, the pullbacks in the case of an uptrend or a market that starts to really turn north. And that's just something, Joey, you and I have learned that's just a dangerous game to play, and it can really just mix your head up.
I mean, even
and I was
professional
referring
traders
to
have a tough time doing that. So
yeah, and it's and you look back on, I mean, after you kind of stumble through a trade that really could have been super easy, you look back on it and you're kicking yourself. And what you said last week, I was just so happy to hear that. I mean, you were saying you were adding to your positions, and that's something that really kind of eliminate. I mean, that allows you to scale in and out of a core position. But that's the hardest thing for traders to do, is to really, when they're right, push it a little bit, not giving away the whole, I understand, you keep adding up, and then when it pulls back 5 cents, you lose everything. But I mean, just managing that core position from the right side of the marketplace. And,
so,
these,
go ahead. It's for gold, oil, and stuff.
Right.
Even when I take profits, I'll leave a few contracts on just to remind myself which side I'm on.
Right. Right.
And even if I take 70, 80, 90% of the position off, I still know, I still have 10% of the position on the right way, so that I can remind myself, okay, if it pulls back to a certain level where, the support on, the unfair high, which is the breakout level, okay, it pulls back there, then I'll be adding to it, not trying to short it. And and so that's kind of, that's worked out really well. And it's the times that I've over traded that I've really just completely messed up a perfect, gold could be up 20% and I'd be maybe flat because I've completely just lost track of which way I was supposed to be.
Right. No,
even though I went into the gold trade super bullish and it's up 20%, and I could still be even losing money, never mind making a little or flat, and it's happened to me in the past. So that's why I said, really keep track of that.
Right. A lot of people too, just on that note, a lot of people that, really treat this like a business and not like a casino will really get a plan in place to where they have two segregated accounts. One of them will be kind of for their longer term positions, and then the other one will be like for scalping. And a lot of people make the mistake of letting a scalp trade turn into a long-term position, but
that's usually what happens, and those are always the biggest losers.
Yeah, I know. Yes, exactly. And but I'm actually not a huge fan of doing that. I'm just, like you said, I'm a huge fan of. And you watch this show, Joey, and you and I talk about this for the folks out there. These computers have kind of gotten really good at short-term volatility and shakeouts, if you will. And trading on a short-term basis is, and trying to trade off a 3-minute chart is you have to be extremely disciplined for one thing, but you also have to be willing to almost trade quite a bit, because you've got to stay disciplined. And like you said earlier, Joey, slowing trading down in this day and time is not the worst thing in the world. And I'm showing the crude oil 240 chart right now. And since we had that kind of leverage off, we look at talking about slowing trades down in that long-term view. You and I were looking at that XLE trade and then the crude oil in the 30-60 area. We're up 20%. Just letting the crude will do its thing and letting the 240 regulate the trade up. And, that's kind of more of the MO that Joey and I trade on, guys out there listening. And it's just, using the scanner, finding these little opportunities or big opportunities a lot of times, and, not really getting, not getting too involved with the noise of the, super short-term trades. I'm not saying there's not a way to make money with that, but just, Joey,
I think making money on those trades, you really it really requires a lot of computing power, because you're looking at, analyzing tick for tick, which is a huge amount of data to analyze. And, I don't want to be that short term. I don't, I'd rather have dinner with the family than be, staring at the screens and stuff. So, so
and sometimes the best thing to do is not look at the screen.
Exactly, because it can shake you out, and then next thing you know, it's just it's one guy liquidating his positions, and then 3 minutes later, it's right back to the trend again. So, if
Correct.
you're too short term, you catch every single liquidation or whatever of the market, and it just freaks you out every time, and then you end up actually getting knocked out of a lot of good trades.
Right. Well, you've been on some very, very notable, desks, bank desks, things like that.
Yeah.
What you said before about just somebody liquidating a position at Deutsche Bank or whatever, sitting at a desk, may cause a 4-tick or 6-tick move down the S&Ps alone.
That's right.
Yeah. So.
And that's just and then it takes like 15-20 minutes to get things back in gear, and then an hour later we're right back to where we started and going back in the direction that it was going. So a lot of it, some of my best trades were me just kind of walking away and saying, I've had enough of staring at the screens, and I believe in the trade that I've put on, and I'm going to leave that, and then I'm going to look at it tomorrow, and that's it.
That's incredibly perfect what you just said.
Yeah.
Well, we had a question in the den earlier, going back to just some charts here. Crude oil, we were talking about, it's kind of going to probably relax here a little bit. The XLE was showing itself possibly a little bit earlier. That being said, what you just said earlier, the answer to the question, and I think Joey would agree to this, is, we're still looking at commodities bullish, but this is not the time to get short crude oil. It's just the time that, hey, we met our targets.
Yeah, we met some real short-term targets. And it could pull back to about 33.30 to 33.50. I'm not 33, 35, 30 to 35.50, and then up we go again.
Well, Joey, can you hang out even farther here?
Yeah, I'll hang out for one more.
Okay, great. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. For guys who are not in the den, RJP in the den was saying something about, Joe. By the way, Joey talked about going and eating dinner and not looking at the screen for a while, and that's great. But RJP recommended to always put the stop in, and that is, we don't talk about stops enough on this show. We do talk about them a lot, but in my opinion, we don't talk about them enough, and that is a part of the game that you put a trade on in this day and time with what can, somebody passes gas in Shanghai, it might affect the U.S. market. And you need those stops in, folks. Trust me, I've been on the bad side of that. I was saying in the den, just going to the restroom and not having a stop in and coming back, and then 30-year was against me 4 handles. That pretty much cured me of not having a stop in, even on a very short-term basis. So anything can happen. A buddy of mine lost $30 in gold one morning really quick. He went over there to check the copier for something in the office, and you just put the stop in. I'm not going to belabor it. So we were talking about crude oil a little bit here, and we've got these 240s, these unfair highs at 36.49. Remember, this has been a nice regulator of the trade. We got a new profile that's here. We're also sitting at the top of a profile in the daily. We poked our head above, and that was really a moment that a lot of people could have been covering there. That would have been on the wrong side. That didn't happen. You didn't get that move. Again, I'm not a big fan of shorting crude oil. I'm just a fan of, we've had a big move. We still haven't completed this cycle back up into 38.50. We haven't retested that we haven't retested that yet. And, again, we've reached our targets. We reached those on Friday. If you woke up this morning, you're like, oh my God, I shouldn't have taken my crude oil trade off. You did the right thing. Okay. Now we're waiting patiently. And by the way, this 240 profile is relatively wide. Like Joey said, we could have a pullback all the way to 34 and some change. But again, I'm not a big fan of trading against this possible really nice bounce up to ultimate 38.50. So this is, let's move on. That's the attitude a lot of times you've got to take. So again, if you've got the scanner, I'm pretty sure you can find some really good opportunities here that are acting to some degree the way you want them to act. Here's the XLF. We talked about these notes possibly being on a long-term bottom of that DMZ around 129. Market may pull back to 1975 and even farther south. Here's the XLF. So what I would generally want to do in this type of situation, if we think we're at the top of our profile in the weekly, I'd want to find things that are, really not exactly looking that great here. Here's PFG. That's at the top of the profile in the weekly and the daily. That's going to be a scary trade. That's going to be really, in my opinion, not getting a lot of leverage. So if you're sitting here, there's the daily, there's the weekly. This is it's not the scariest trade we can get into, but it's not the weakest instrument, if you know what I mean. So PFG, every time I say PFG, you know what I think of, right? Guys out there who traded futures for a while. Nobody commiserates with me on PFG, those three symbols. Ouch. Tom O'Brien. Ouchie, ouchie. Did that guy ended up killing himself? Wassenberg? I don't know what happened to him. That was an amazing story. He tried. Okay. All right. Didn't work. That's a shame. Anyway, we're at the top of the profiles on the weekly on PFG. This is called Principal Financial Group. And the daily, we've got a similar situation. So, something that you might want to keep your eye on. By the way, eSignal has, just want you guys to know this, eSignal, and I hope you guys are still seeing these charts, they've got a demo trading account in here. I noticed Thinkorswim was keeping track of, to some degree, a portfolio. So what I'm going to do, just so we can go back and reference these things, I tried this before, and it didn't seem to hold the trades. But as we go into here, there's a paper trading system in here, and it kind of erased the portfolio. I was trying to keep track of some things before. I think I found a way to hold those. So we're going to, starting tomorrow, we're going to start putting some trades on the board. We're going to keep track of them. I'm not trying to solicit, all the compliance rules are in place, guys. We're just showing you point-wise how some of these things act, and we're going to put the stops in, and we're going to, trade this. We're going to put them, hopefully a million pesos or $1 million. I don't know how they regulate this, but we're going to keep track of a little portfolio, and we're just going to kind of see how these things unfold, and we'll be able to go back and reference some of the things we talked about before. We'll also put some option strategies in here, because some of these trades really warrant being able to stay in them, that are those relativity type relationships globally, where we want to try to hang in there on these things on a macro level. So the best way to do those types of trades, I've found out, is not to continue to get stopped out and re-enter the trade, is just lop on an option hedge, and just, if the thing can unwind properly, that's great. If it doesn't, you just basically get options stopped out of the trade. So we're going to be looking at a lot of those. All right, just checking the den. We're still talking about Russ Wassendorf. Let's move on. So that's my take on the financials today. Again, you can go into the scanner. You can find some. Let's see. Let's just take a look at this as we look at the matrix here. I'll tell you what I'm going to do. Let's go in here and let's just see what's been climbing and what's had some new profile. Okay, here we go. Crown Castle, CCI. All right, so there's the daily. New profile attempting to appear. No, I don't like this one. Forget it. Let's look at Weyerhaeuser. Not really a financial. Oh, my goodness. All right. So, again, new profile attempting to appear on the daily. This is, I like this. I like this. Let's see here. Weekly. Barely. Yeah. Lumber going up hasn't really hurt this particular stock, though. That was just the sort I did. Stocks trading above profile, yet that's a little bit of a scary situation. New box attempting to appear on the daily. We can go in here back into the XLF and do this number. Just basically find some things that are still trading below. Here we go. Okay, this is one we looked at the other day. ICE. They actually bought eSignal. Tom, did you know that? I don't know if you knew that. Tom's not listening to me. He never does. Plum Creek Timber. Let's take a look at this one. No inflection points to really pair off of there. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. And I want to take a look at the XLU. This is something we've been pounding the desk about. There's the 1 hour. Really wild how this thing just ramped up on the, Friday. Just got really sick on the north side there. But we're going to go into the daily. We noticed this in the seller. Everything's still green. And I can't wait for these guys to get these cell structures up here in the charts. It's going to be cool. Should have already happened. But the bread and water idea didn't work with them, so we're down to just basically free oxygen now. Anyway, we're taking a look at the XLU. All right, so you guys know the relationship here. The yield, the thirst for yield, it ain't there. It ain't been there in the 10-year. So as we look at this, I would have we've got a little situation on the 10-year here that I'm paying attention to. Got down into this DMZ, kind of consolidated a little bit lower here, but you still haven't broken the long-term weekly on the 129 area, and market coming back a little bit. Broad stock market could get a little bit of a bounce here in the 10-year, which would mean lower yields, which would mean that, in my opinion, you go back to this XLU. I like the way it closed on Friday, and I like the way it's been fighting this note situation. We could have another breakout here above 47.28 in the XLU, and I know that may sound nuts, but that's the way I'm looking at it here. So again, I guess the main thing I wanted to say is, do you short against this inflection point at 47.28? My answer is no right now. You met your targets. We talked about leveraging again off this 45.66 area. We've reached 47.28. Now you got to sit tight and, in my opinion, wait for a weekly close above 47.28. And you might be going, well, why wouldn't we buy it lower? That's just the way the confirmation game goes. So that's where we're at. I agree, Jay. Here we go. All right, so we're going to take a look at something I was waiting patiently for a breakdown to happen, and my goodness, that did not happen. So, again, didn't get a close below 80.60 on May beans. If John from Philadelphia is trading this from the long side, kudos, because this is a pretty decent rally here. 25 cents a bushel on an instrument. I didn't even see this happening. So again, I'm still looking at this as range bound. So the next time you got a chance to short this now is 891, 892. Again, the breakdown didn't happen. This is a great example of what I just said about the utilities. Let's wait till we get a close below some of these inflection points. That didn't happen, so therefore we didn't get into massive trouble here. We were able to short resistance before, take off trades, wait. Closes didn't happen, so again, no harm intended. So that's a good example of the inverse of what we were talking about with the XLU. All right, here we go. Got about 20 seconds here. So to close with gold, on Friday, Tom and I were talking, I think, when this was happening, gold, again, staying off the short gas pedal and talking about what Joey was saying was, not lose sight of what the broad trade is and trying to wait until we find support or wait until we have breakouts. That 49 was hit, 50's that support on the 240. What do you do now? In my opinion, you don't short this, not right now. So you're going to wait for breakouts above 1272 now, or pullbacks into 1263, which I think we've already done this morning. No, we haven't. 1263 is the weekly unfair highs, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.